the back? All good? Good deal. We appreciate the invitation that Austin and I do to come here today. And what we're going to do for the next 45 minutes, the title of our section here is Grain Market Outlook and Considerations. And I would tell you this afternoon that I'm going to talk for about 15 or 20 minutes, kind of give you a broad overview, if you will, of what we're seeing in the corn, soybean, a little bit on the wheat market. And then I think importantly, considerations, and that is, what are we looking at marketing-wise for these 24 crops and 25 crops? And Austin's got some terrific information to share with you for about 25, 30 minutes in terms of what you're looking at for crops you've either got left in the bin from last fall, or maybe your crops you're looking at planting here this spring. Obviously, we had a crop insurance presentation this morning. We've set those insurance prices now, so the wheels are in motion, obviously, for 25 already. So with that brief backdrop here, I wanted to again thank Nate for the opportunity to come out and visit with you folks again. It doesn't matter whether you're in Central Illinois, which is where Austin and I work at, or out here on the East Coast. There's a lot of commonalities amongst producers worldwide, statewide, countrywide, and worldwide. And what I'm going to share with you this afternoon are some things going on worldwide, and then bring it back down to the U.S., then bring it back down to what we may be looking at for these crops that you're going to grow for 25. So again, great market outlook here. We're looking at a lot of things happening in the world right now. Some bullet points here: proposed tariffs in Washington, weather concerns in Brazil and Argentina, a lot of conflicts going on across, of course, in the Black Sea, Israel, and China is a big factor in the world market now too. All those things are happening every day, folks, moving pieces. It's impossible to get your arms around everything. And I'll say that again, it's impossible, even for us, when we're doing that 8, 10, and 12 hours a day for a living, to get our arms around everything. The markets are just too complicated. There's too many moving pieces. So that's going to tie back into what Austin's going to share with you in a bit. Some of the things we'll share with you here is this go back to January of this year, March 25 corn futures. You see we had a modest recovery from the harvest lows here, coming up to about $4.50 a bushel. We came out there in January with a much smaller than expected crop from the USDA. This is what we're looking at was a record yield. You said, Brian, you just said it's a much smaller crop. Everything's relative to expectations. This is what the trade expectations were. This is where the number that came in at. So we looked at the market go about 15 cents higher after that report there in January. So we're off to the races as such supply-wise. We had a smaller than expected supply from the 25 corn crop. Stocks to use ratio here is tighter than a year ago. Not as tight as maybe 3-4 years ago when we had $7.50, $8 corn, but still tighter than a year ago. And look at those world stocks. World stocks are much, much tighter than they were 3-4 years ago. So the market responded. One of the reasons the market responded here in the last 60 days, until recently, was the fact that we had a real good export market. What the slide shows is how much export sales we have on the books. This red bar here is China. 3-4 years ago, we had the arrangement with China, phase 1 agreement where China was going to be buying goods from the U.S. And they basically bought a lot of corn at that time. And they did that even when the when the Biden administration came in, but that dried up the last couple of years. What I thought was interesting is if you take out China, our buying from all other destinations here is the second highest it's ever been. So there were some fundamental reasons why the corn market charged higher, if you will, during the winter months. We have smaller than expected crop, we had strong export demand, and we saw this March corn contract go over $5 a bushel just 2 weeks ago. Just 2 weeks ago. $5 a bushel. And then went all the way back here again to harvest, starting out the crop year here in 24, 25, down there near $4.10 a bushel. So nearly a dollar rally in the corn market, supply and demand. Well, what's happened? What's changed in the last couple of weeks? One of our main competitors in the world corn export market is Argentina. And they've got plenty of rain here now. That really was a big change from what we saw in January when it was hot and dry. So Argentina now is pollinating corn, believe it or not. And they're seeing much better conditions for that late corn that's pollinating. In fact, Argentina accounts for about 25% of the world's corn exports from March to June. 25% of the world's corn exports from March to June. So when they had a little bit of a weather scare back in January, hot and dry, the market was saying, well, they're going to have a bad situation back here like they did in 22. What this chart shows is how big the crop is, how much they export, and obviously the smaller the crop, smaller the exports and vice versa. But we're not going to see that. A repeat of the 22-23 drought now appears unlikely. I think we're going to back off the production number from last year, but it's not going to be that catastrophic situation. The other thing that definitely is now front and center in the corn market is the concern about the tariffs. I think Austin and I are visiting, I think it's tomorrow, that the tariffs that were delayed a month ago, proposed tariffs are going to be slapped onto Canada and Mexico. And China, I just read my email this morning, China's saying, you know what, you've still got the tariffs on us, it's time to put the gloves on again, and here we go. So China's also going to be a factor in terms of, here we go again, back in 18, 19, and the market is falling apart, folks. This is not updated. I just looked at my computer here this morning, we're down under 450. So that's how quickly things can change. That's how quickly things can change. Is the market overreacting now? Yeah, maybe, maybe not. I think that the key thing is, how do we manage this type of movement in the markets? And that's the key word that Austin's going to share with you in a little bit. In advanced trading, we're not in the price prediction business. And you say, well, what are you doing? We're in a risk management business. Managing risk, whether it's for growers or for the warehouse industry. We also work with country grain elevators. We also work with some end users. But regardless of who you're working with, we can't predict this. We definitely can't predict what's happened in the last 10 days. What we can do is use tools in the market to manage that. And that's what Austin's going to share with you in a little bit. I know that the big concern, particularly in the poultry industry right now, is the bird flu. I could spend the whole 45 minutes talking about that. We don't have time for that. What I can share with you is that's another thing in the market that's got the market concerned. When you look at the components of feed usage on corn, corn is still the largest, beg your pardon, feed usage is still the largest component of demand for corn. Just under 6 billion bushel. We've got a little bit of an increase in GCAUs. That's yet to be seen, if that's going to be realized, unfortunately, with the bird flu situation going forward. So what I'm trying to say is that going forward, the corn market's going to be real sensitive to see if this is going to be resolved soon, which we all hope it will be, or if it's going to linger for a while. And we're going to see a lot of depopulation. I hope that doesn't occur. But for now, the market's saying, well, we're going to see a little bit more feeding this year than we did a year ago. We'll see. All right, balance sheets. Balance sheets, some people's eyes can glaze over sometimes when you look at the balance sheet. The bottom line on the balance sheet to me is pretty clear. What are we looking at for carryout? Okay? Are our stocks increasing or decreasing? This is the USD outlook form held just last week. And I know the numbers are small on the back, but the ending stocks here for this crop year, 24-25, are down about 200 million bushels from what they were last year. 176 versus 154. What are we looking at for the crop you're going to plant this spring? The USDA told us last week we're going to have a carryout when the dust settles for next year, nearly 450 million bushel more, 425. So the bottom line is that the carryout projected for next year is on the upswing. How do we manage that? Change happens in the market and can be very fast. And as we stand here today on March the 3rd, we're seeing that happen with the corn market in a meltdown phase, if you will. May corn went from $5.19 a bushel, and I just checked this morning, I think it's like $4.55. So that's nearly 60 cents a bushel. That's how fast things can happen. So our balance sheet, again, our internal balance sheet of ATI, we could actually bump that up a bit to over 2 billion bushel with an average farm price well below where it was this year. closer to maybe $3.50. That may be worst case scenario. But regardless, the projected carryout, and here's the key message. I think we're going to plant more corn in 25 than we did in 24. We've got 3.5 million acres more penciled in. All right, what about the summary points? Corn is priced competitively. We've had good exports. I'm not going to go through each and every point here, but a couple things to watch are 100 million bushel swing in exports. If this Argentina crop is bigger than what we think it is, maybe Argentina will sap the U.S. corn export market during the second half of the crop year, March through August. That'll be something to watch. China, are they going to come in here and buy any corn? Or is it strictly going to be trade war for the next 6 months, year, who knows? We are seeing steady ethanol usage, but I would say right now the corn market is going through, feels like a panic washout phase. The commodity funds, for example, in corn, had a long position. These are basically speculative folks, managed speculative money of over 350,000 contracts. I believe that's under 300 now, but that's still a big, long position. And the concern I've shared with growers here the last couple of weeks is it feels like everybody's starting to run for the door at the same time. In other words, get me out of that long position. Corn's losing 10, 12, 13 cents a day. That's going to end eventually, but who knows where that'll happen. Austin's going to share with you some ideas on how to deal with that. What about the bean market? Bean market here back in January. The bean market was not as much of a post-harvest recovery. It was kind of struggling. But the USDA did tell us we had a smaller than expected bean crop. Again, well below expectations here. And the bean market recovered nicely here, back up to over $10 a bushel. Stocks to use, though, a little bit of a different picture compared to corn. Remember corn, tight world stocks to use. Beans, very ample world stocks. Again, world stocks to use in the green, nearly at record highs. That's the record right there. Here we are here. So the bean market was under some pressure. We did have some weather scares this winter, again, mostly in Argentina. Brazil, when you look at the whole total South American supply, with Brazil harvesting beans as we speak here today, it's going to be record high here in 24, 25. They're talking about a 10 to 12% increase in the size of the Brazilian bean crop this year compared to a year ago. So we got a larger crop in South America. Our exports to China are following. The orange bar is U.S. corn exports, or beg your pardon, U.S. bean exports to China. You see that orange bar is getting smaller compared to what it was a few years ago, whereas that gray bar is Brazil. Those numbers continue to increase. Unshipped bean sales, a different picture than what we're looking at for corn. We've got so much competition from southern hemisphere that we're not seeing the demand for beans that we're seeing as the demand for corn, particularly as it relates to China. Obviously, this is 4 or 5 years ago when the U.S., 6 or 7 years ago, when the U.S. had, really head-to-head tariff battle with the U.S. and China. That number is coming down here relative to recent years, but it's not where as low as what it was back in 2019, 2020. All right, where's the market at? The bean market is kind of consolidating now. It's coming back down from those highs we saw back in February when there was greatest concern about Argentina weather. Looking at soybean demand, the other thing about soybean demand is there's the proposed biodiesel growth or biodiesel here the next 3, 4 years. If you pencil that in longer term, the domestic crush in the U.S. is going to be increasing, that red bar. Our exports are struggling here, and steady to lower here. That's because of Southern Hemisphere competition from Brazil and Argentina. So what about the balance sheet for beans? The balance sheet for beans is kind of heavy right now. Here's why. If you look at that turned out to be corn. Here's the bean balance sheet. Here's the bean balance sheet. A couple years ago, we had an average farm price of $14.20. Carryout was $2.64. Now we've dropped the average price down to $10.10 for this year, and the carryout's pushing $400. The USDA did tell us last week they think the acreage is going to decline here for 25, down to 84 million acres compared to 87 to 1. So they're thinking the carryout may be declining here to 60 million bushel lower, but still an average farm price near $10 a bushel. But I think, if anything, in the bean market, I feel now, with, again, the potential for trade tariffs, battle, it feels heavy. It feels like it could be overpriced. Our balance sheet here for 25, beg your pardon, 25, 26, we've got a different, this is a misprint here, but we've got as high as 567 on the carryout. We've got our carryout for 24, 25 at 420 compared to 380 for last year. So a couple bean summary points. I think the key thing is China, it seems to be adding to their reserves. They're buying now from South America, specifically from Brazil, and they don't seem very inclined at the moment to buy a lot of beans from the U.S. So that's a big, important message. I think we're going to see lower acres of beans here in 25 compared to a year ago. I just don't think it's going to be enough to really catapult the market higher. The one fly in the ointment for both corn and beans is we're starting to get dry in the Midwest. And that's something the market's got to be aware of going forward. Wrap up here, just a couple slides on wheat. The wheat world stock situation is not very tight unless you remove China. Then it gets tighter. Then if you remove U.S. and China and Ukraine, then wheat gets tight. And we just saw a couple weeks ago, we had a big rebound in wheat prices. There was some concern about what was going on with some Black Sea crops, but that's backed off now along with corn. I think Russia's going to back off their exports next year, but still be pretty stout. That's something to keep an eye on. Here we're looking at the winter wheat acreage here for 25, 26. Soft wheat is supposed to be up, projected to be up by the USDA compared to a year ago, a little bit there. The wheat balance sheet, I think we're looking at a very ample, not burdensome, but ample supply of domestic wheat here in the U.S. Our carryout for this year is about 800 million bushel. I think the USDA came out last week and said 826 for 25-26. So a little bit higher for next year, but wheat is kind of unchanged in terms of price. But regardless, I think that all crops at the moment for 25-26 see that potential for an ample supply, and possibly in the case of corn, building carryout. So something to keep in mind. Just wrap things up here, and I'll turn it over to Austin. Again, world stocks, excluding China, the U.S., and Ukraine, are projected to remain tight. That's why we can get very sensitive to a supply issue. That's why I say that last year, in fact, the spring of 24, we saw wheat rally about $1.50 in just a couple of weeks. So I'm going to wrap things up and thank you for the opportunity here at this time. Turn it over to Austin. But again, thanks, Nate, for the opportunity. I'd be happy to answer any questions when we get to the end here. So I'm going to introduce Austin Schenkel. Austin works in our Bloomington office, working with the producer risk management.